5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Under pressure, the dollar weakening as the yen surges on speculation around a coordinated U.S.-Japan intervention. Shutdown risk rising. Senate Democrats threaten to block a giant government funding package after a second death in Minnesota during an immigration crackdown. And markets assessing the impact of the winter storm, with power grids and transportation infrastructure getting tested ahead of a week full of tech earnings and a Fed decision. It's going to be a huge week. We thought we had put to bed some fears last week with the Greenland issue, but there are more emanating now. For example, President Trump's threat on Canada, tariffs there potentially. We also have this partial government shutdown looming now, less than a week away. So we do have futures pointed lower. It's perhaps not surprising. Let's take a look at the bond universe, because we are also seeing a little movement lower again in bonds. So the 30-year yield back down to 4.80. The 10-year yield has found its comfort zone once again. It's just above 4.20. There's just no getting it off that level, is there? The 2-year yield at 3.58. So that is definitely a flattening of the yield curve. So there you can see a little bit of the fear coming out of the bond market. But let's take a look at currencies, because we're going to be talking about currencies a lot today. The yen, 1.2% stronger versus the US dollar. We went from above 159 on Friday to below 154. That's more than a 5 yen move. There's talk of the New York Fed calling around and checking on currency exchange rates. There's talk of intervention. There's Takaichi warning the markets that there will be intervention if necessary, even though she says she doesn't want to talk about currencies. And then you have gold nearing $5,100 an ounce. Not to mention the aftermath of the storm, which sees natural gas up 17% just a few hours ago when that market opened. Front month contract, albeit, but nevertheless, that's the highest the front month contract has been at in 4 years. 2022 was the last time we saw natural gas above $6. All right, let's get to some individual movers now on this Monday. Let's get to London and Chloe Melly. Chloe.
Good morning, Bonnie. Let's start with Revolution Medicines today. And the shares, as we can see, are taking quite the hit after the Wall Street Journal reported that Merck was no longer considering buying the biotech firm. And this is a deal that could have valued Revolution at about $30 billion. And therefore, the breaking down of those talks is not being taken very well by the market this morning. And we are down almost 23%. Moving on to USA Rare Earth, which is, as we might have guessed, a provider of rare earth materials. And it is up very strongly in pre-market trading this morning after the FT reported that the Trump administration was considering buying a 10% stake in that company, and that would represent an investment of about $1.6 billion. And therefore, we are up almost 40%. And a decision on this is actually expected later today. So let's watch out for that. And finally, miners are also in the green, as we are used to seeing them these days. And that is after gold hit yet another record, extending that rally as investors continue to rush towards safe haven assets because of those renewed political and geopolitical and trade tensions, of course, and therefore that is reflected in those shares all in the green this morning.
All right, Chloe, a similar story this week, it seems. Chloe Melly there in London. And coming up this hour, a closer look at the dollar and the yen and all of those currency moves with Sonja Marten of DZ Bank. So our top story today, a huge snowstorm hitting the East Coast and many states across the United States.
This immense snow fighting operation, the largest in the entire country, is working across our city every single minute. We are speaking of more than 700 salt spreaders and 2,200 plow vehicles, which are being monitored in real time by DSNY's Blade Runner system.
Joining us now outside in New York City is ABC News reporter Lionel Moyes. Lionel, nice to have you on the show. Sorry that you are on the ground outside, but give us a sense of the scale of this storm. Was it what we were anticipating?
It was exactly what we were anticipating. And the first thing is, it is very cold, and that is going to be a big issue moving forward. And that's because all of the snow that fell, 16 inches in some areas, it's not going to melt anytime soon. And that is going to be a very big issue for the morning commute for so many people. Schools here in New York are actually remote today. They are also suggesting that those who do not need to be on the roads still stay home.
Yeah, the ice is going to be a huge issue. How are emergency services dealing with all of this?
You know, it seems that emergency services have been really prepared. Even as we were setting up for this live shot, there was an emergency service vehicle back here working on things on the road. In my own neighborhood, I saw the plow come through at least 10 times. I've never seen it happen that many times. It seems like all of the warnings, people were taking heed, and it seems like the city had enough staff to kind of keep things at bay. But again, the big thing to see will be that ice tomorrow, because people are getting back to normal and thinking that the snow is kind of going away and it's going to be fine. And it's still going to be very dangerous. The National Weather Service is warning that we could see the effects of this for several days.
Yeah, and of course it's disrupting energy infrastructure and transportation, no doubt, across the country. Do we know how long experts are saying the disruptions could last, Lionel?
Yeah, they are saying several days. We're hoping by the end of this week. Looked at our local forecast just here in New York, but again, there are several states and several climates dealing with the same thing. But here in New York, it's not going to get above freezing until at least Thursday. So putting that into perspective, people still need to get around even for essential things or going back to work. And we're going to need to be careful because ice could be a major factor. In the storm, though, things were good. Some things were put at halt, like DoorDash delivery. They did actually have to cancel service at one point because it was just too much going on with the snow and the roads were just not safe for those delivery drivers.
All right, Lionel, several more days to come. Thank you so much for the context. That is Lionel Moyes of ABC News. The US dollar is selling off against all major peers, hitting its lowest since September. That's a speculation that the US coordinating with Japan to support the yen is out there. Bloomberg's Ven Ram joins us now for more. Ven, we've seen a 5 yen move just between Friday and today. Is what we're seeing actual intervention or just the market speculating that there might be intervention soon?
It's more the latter, Vonnie. I think that, what happened on Friday was that during the Asian session, there was considerable speculation as the yen ricocheted above 159 very strongly within a very brief period of time. So that set of speculation that the BOJ authorities and the FinMin authorities were doing rate checks in currency days around currency desks. And then later on in the US session, we also had the New York Fed doing the same. So that kind of gave the markets an idea that this was a coordinated warning for the markets before any actual intervention. As you mentioned, the yen has already rallied 5 big figures so far. But in previous intervention episodes, mind you, this is not an official intervention, but in previous intervention episodes, the yen rose about anywhere between 10 to 12 yen. So I think that the comeback in the yen has further to go. And the most effective thing is that because the US Fed is involved in this, I think that they are going to accomplish that much more without actually intervening in the markets.
Yeah, I mean, it's doing their work for them in many ways, which is obviously what they want. Now, interestingly, the Swiss franc is also strengthening, and I'm curious, is this a similar dynamic that's playing out? Are we going to see the SNB actually considering intervention too?
Well, I think it's not an imminent thing, because if you look at the currency's real effective exchange rate, it's approaching levels where previously the SNB has intervened. So we are not quite yet there, but we could get there in a short span of time if the Swiss franc continues to attract haven flows. But I think that the SNB is likely to expand its balance sheet further by intervening very gently in the currency markets. But I think we are not yet quite there.
Then we're obviously seeing gold very close to $5,100 an ounce, right? It blew right past that $5,000 mark. How much of those strength is thanks to dollar weakness purely?
Well, I guess it's a question of a bit like the tail wagging the dog here, because the gold has had its own momentum. Gold and silver are completely in a different league at the moment. They don't need further inspiration from a weaker dollar, although that does help. But I think the question here, Vonnie, is the risk reward for investors who are trying to go long at this point, because the risk reward is clearly very skewed and lopsided at this point, because I think that even the most bullish call is for gold to end the year at $5,400 an ounce. But I think that the investors are much more likely to be aware of the pullback in the short term, the risk of a pullback in the short term. If you look at gold's volatility expressions, they are exploding. They're above 26%. what that implies is that gold could drop to as little as $4,700 an ounce, and in silver, the volatility expressions favor silver to drop to as little as $86 an ounce. So I think it's the possibility of a correction that is looming large over the markets at the moment.
Yeah, but interestingly, Ben, we're seeing this gold move, but we're seeing rates just completely calm, right? They're so much calmer than they were even last week. Why are rates not also expressing the same thing that gold is expressing?
Well, I think that, in rates, you've got a completely different dynamic going on. Because if you look at the 2-year yield, we are nudging 360 at the moment. And if you're looking at the 10-year yield, we are doing about 420. And what does that say? In a time when the Fed meets this week, and if the Fed is expected to keep cutting rates, and at some point this year, I think that the 2-year rally should rally, and that is not happening. So the markets are already kind of sending a message of diffidence to the Fed, saying that, look, you can cut rates as much as you want, but that won't be fair, and we'll keep yields where they are at the moment.
Wow, Ben. OK, thank you so much, Ben. Our market whisperer there, Ben Ram, out of Dubai. Thank you. Now to other top stories trending on the terminal this morning. Amsterdam-listed CVC has agreed to buy US credit manager Marathon Asset Management. The deal is a cash and equity transaction with a base consideration valued at as much as $1.2 billion. The acquisition is part of CVC's efforts to grow its footprint in US credit markets. SoftBank is said to have halted talks to acquire US data center operator Switch, a setback for founder Masayoshi Son's ambition to roll out Stargate AI infrastructure. According to sources, two sides remain in active discussions about a partial investment or a partnership after Son conceded that a full acquisition was off the table and scrapped a planned January announcement. The UK is losing more jobs than it's creating because of artificial intelligence, and at a faster rate than its international peers. That's according to a Morgan Stanley report. British companies reported that AI led to net job losses over the past 12 months, with an 8% net job loss, the highest level in a group that included German, American, Japanese and Australian firms. Coming up, risk on the horizon for another government shutdown as tensions flare in Minneapolis. More on that next. This is Bloomberg.
We cannot fund a Department of Homeland Security that is murdering American citizens, that is traumatizing little boys and girls all across the country in violation of the law. Democrats are not going to vote to fund this version of the Department of Homeland Security.
Democratic Senator Chris Murphy speaking to CNN after a second death in an ICE crackdown in Minnesota. GOP Majority Leader Steve Scalise spoke to CBS on Sunday saying, quote, Minneapolis has its own problems, failed leadership that has led to all of this. Failed leaders need to look in the mirror and tone it down. Now, more than 60 CEOs of Minnesota-based companies are calling for an immediate de-escalation of tensions between state, local and federal authorities. Joining us now from Washington is Bloomberg's Kasia Klimashinska. Kasia, take us first to the Senate and what happens now that the Democrats are threatening to block the funding package.
Hello. The bottom line is that there is a new and a higher risk for the markets now after this terrible situation in Minneapolis over the weekend, because not only Democrats, but also some Republicans have expressed frustrations, and Democrats said they will not allow more funding for the Department of Homeland Security, which is the department that is enforcing the anti-immigration policies. So what we have is this higher risk of a partial government shutdown at the end of the week. Congress must pass another funding bill, or there will be no money to fund not only the Department of Homeland Security, but also, for example, the Department of Defense or Department of Labor. So if lawmakers don't find a compromise, those agencies will be shut down, meaning, for example, that the Department of Labor may not issue some economic reports on time. The issue here is that Democrats don't want to vote for more funding for the Department of Homeland Security, but the bill that is ready to be passed has the money, not only for the Homeland Security, but for other departments. So now lawmakers have to decide whether they strip away the Homeland Department and vote for a budget for other agencies, or they find some other solution. But there is very little time. It's Monday already. We have snow here in Washington, D.C. The city is paralyzed. Lawmakers and only senators will not come back until tomorrow. They need several days to pass any legislation.
Right, and I mean, the House is not scheduled to be back until after the shutdown or partial shutdown would begin anyway, right, Kasia? So is there any way this gets done, even if the GOP goes ahead without the DHS funds?
Yes, so that's another issue that the House passed the bill last week before an American citizen got killed by a federal officer in Minneapolis. So House lawmakers left the city and they are not planning to come back until after this week. Of course, Republicans can decide to cancel this break and call them back to town. But for now, they don't even have any specific bill to vote on.
No, exactly. Kasia, thank you so much. Bloomberg's Kasia Klimaszinska. Turning to trade, Canada saying it won't back down on its efforts to diversify trade away from the United States. That after Treasury Secretary Scott Bessent suggested that Prime Minister Mark Carney did an about-face by striking a deal with China to lower some trade barriers. Let's get more with Bloomberg's Brendan Murray. So another day, another tariff threat. Brendan, does Canada have to be worried given that the most recent tariff threats have not been carried out?
Yeah, exactly. This is the third big tariff threat that we've heard from President Trump this year. He's made this threat to the trading partners of Iran. He did so to European countries last week over Greenland, and now this latest one on Canada, the 100% that he's threatening to put on Canadian exports to the U.S. Most analysts look at this and say this is never going to happen. This would be way too costly for U.S. consumers. And severely hurt Canadian companies even worse. And so a lot of analysts are looking at this and putting this in the category of big negotiating tactic. President Trump's trying to get some leverage over Canada. He's annoyed at Prime Minister at Carney over his remarks in Davos last week that sort of upstaged President Trump's own comments. So most economists, analysts are looking at this and saying it's bluster and it's never going to happen. It would destroy one of the world's biggest bilateral trading relationships, and putting a 100% tariff in place would be self-destructive.
Meanwhile,
for President Trump.
Yeah, and Canada is continuing on. It's in India negotiating another deal there at the moment. I want to ask you, though, about Volkswagen, because the CEO says the company might actually pull its plans for a U.S. Audi plant if tariffs aren't cut. Is this the first instance of a company actually taking a stance and saying, you know, we're going to call your bluff, if you know, doing what Trump does, but vice versa?
Yeah, exactly. So this has come about. The Audi, Volkswagen has been planning on making this investment for a couple of years now, predating Trump's second term. But what they're saying from the comments that we're reporting is that this is too unstable of an environment. Set aside the cost of the tariffs, but the policy uncertainty that all of these threats of tariffs are causing just makes it impossible to make an investment in. And so the Audi executives are saying, you know, this is on hold indefinitely until we get some sort of policy that's predictable, that removes the uncertainty. But this just goes back to the risk that we saw for much of last year, the tariff uncertainty. We thought it was all over with, and that President Trump would come into this mid-year election year ratcheting down the rhetoric on tariffs, but he really hasn't, and in some ways he's even stepped it up and applied it to the realm of geopolitics, sort of outside the normal bounds of a trading relationship.
Yeah, exactly. Brendan, thank you so much. Bloomberg's Brendan Murray. Coming up, President Trump says his administration is reviewing everything about the Minneapolis shooting. More on that and what else is making headlines in your front page news next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the Wall Street Journal leading with a fatal shooting in Minnesota. In a 5-minute telephone interview, President Trump told the Journal, quote, "We're reviewing everything and will come out with a determination." The Journal also saying the president criticized the man who was killed, Alex Preddy, for carrying a gun during protest activity. Next up, Reuters is reporting Ukrainian President Volodymyr Zelensky saying a U.S. document on security guarantees for Ukraine is completely ready and Kyiv is waiting for a time and place for it to be signed. The statement, an indication weekend talks with Russia in Abu Dhabi made some progress. And finally, the Financial Times reporting defense company Rheinmetall and satellite producer OHB are in talks to launch a joint bid to build an equivalent to Elon Musk's Starlink internet service for the German armed forces. The FT says the proposed joint venture would give the groups a slice of Berlin's €35 billion military budget. Coming up, the dollar weakening, the yen surging. We're going to talk with DZ Bank's Sonja Marten about currency moves. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Under pressure, the dollar weakening as the yen surges. Speculation around a coordinated U.S.-Japan intervention. Shutdown risk rising. Senate Democrats threaten to block a giant government funding package after a second death in Minnesota. And markets assessing the impact of the winter storm with power grids and transportation infrastructure getting tested ahead of what's a full week of tech earnings and a Fed decision. So a massive week on the way, but today markets are reacting to some threats that emerged over the weekend, including that risk of a partial government shutdown rising, and that would happen in less than a week. So you have futures pointed lower. We also have President Trump threatening Canada with tariffs now, and of course the after effects of the winter storm. Let's take a look at bonds, because that of course is all about the FOMC meeting Wednesday. Not anticipating any kind of rate cut or any movement, but we are anticipating a lot of parsing of language. The 2-year yield is not budging. It's at 358.57, but the 30-year yield and 10-year yield both came down, so a little bit of curve flattening there. The 10-year yield right back to its comfort zone practically. And then take a look at currencies, because this is where the real action is right now. We had the yen above 159 on Friday. It is down below 154 today, 1.3% weaker just in the session alone. Gold almost at $5,100 an ounce. And natural gas futures, well, that's the winter storm story. Up 17% when that market opened just a few hours ago. In Europe, it's just a mess, and the front month here in the United States is reacting to that and the winter storms all coming together. We're at the highest for the front month contract since 2022. Let's get to some individual stocks now before we get back to the currency story. Let's get to London and Chloe Melly.
Good morning, Bonnie. Revolution Medicine shares are firmly in the red this morning after the Wall Street Journal reported that Merck was no longer considering a bid for the company. This is a deal that could have valued Revolution at about $30 billion. But now those talks are breaking down, and therefore we are seeing that reflected in those shares in pre-market trading today. We are down almost 23% for that biotech firm. Moving on to USA Rare Earth, and there the company is moving very, very much higher. It's surging this morning in pre-market trading after the FT reported that the Trump administration was considering buying a stake in the company, considering investing about $1.6 billion in that company. And this is an announcement that could come as soon as today. So we'll be watching for that as well. And finally, miners are in the green today as gold surged to another record, pushed by this investor rush towards safe haven assets. And we are seeing that reflected in all the shares of miners today, all of them in the green.
Chloe, thank you so much. Those miners very happy at the moment. Not so happy New Yorkers bracing for that messy commute this morning after the heaviest winter storm in years.
This immense snow fighting operation, the largest in the entire country, is working across our city every single minute. We are speaking of more than 700 salt spreaders and 2,200 plow vehicles, which are being monitored in real time by DSNY's Blade Runner system.
Joining us now outside in New York City is ABC News reporter Lionel Moyes. Lionel, give us a sense of the scale of this storm, the context of it, how it fits into storms past and so on. Lionel, I'm not sure if you can hear us, but curious as to how bad this storm is affecting New York right now, if you can hear us. All right, we'll get back to Lionel Moyse in just a few moments. Of course, what we do know is that it's affecting all sorts of assets, including natural gas and so on. But what we'll do is we'll look at currencies right now, because we're seeing a massive movement in dollar yen as well. And that's just one currency that's affected. Yen at 153.74. It's rallied 3% versus the dollar since Friday. 5 yen, 5 big figures. The New York Fed calling financial institutions to ask about the exchange rate. And Prime Minister Takaichi also warning markets. Meanwhile, the dollar is slipping and gold is gaining as the debasement trade is back on. Sonja Marten of DZ Bank writing, quote, "There is no denying that White House policies are putting pressure on the dollar. Also, the Bloomberg U.S. Surprise Index has been falling, which supports the view that while U.S. economic data remains solid overall, they're not as impressive as Trump would have us believe." Sonja is chief economist at DZ Bank, and she joins us now. So, Sonja, you think that the U.S. economy is actually weaker, perhaps, than what we might be seeing at face value in the data. Is that correct?
Yes, I mean, we had a very surprisingly strong Q3 GDP release recently. At the same time, obviously, we've seen the official data suggesting that inflation is well below 3%, and all that seems almost too good to be true. I mean, to be fair, Q3 growth did see some positive impulses, obviously from AI investments. We've seen that, and there's a few other items on the GDP numbers that suggest underlying strength, consumption in particular. But there are also points of weakness, you know, in the labor market. Definitely, also when you look at consumption, the savings rate has been falling quite rapidly. We are witnessing what's called a K-shaped economy, and there's an underlying very soft consumer sentiment. So I think there are pockets of weakness in the U.S. economy, definitely.
Well, so how much is this trade, the debasement trade, and how much is it really just the yen trade at the moment and the flight to safe haven? Because we're not seeing the same kind of panic or unsettling behavior in the bond market, for example.
Yeah, it's a very confused market, I would say, right now. There is a lot going on. I mean, it's the 26th of January today, and it feels like the year is at least 3 months old with all that's been going on the geopolitical stage, on the economic stage, everything that's happening. So I think markets are very confused right now, and I'm not sure which trade to play. I think there's a definite flight to safe havens. Having said that, with some concern about the U.S., I mean, we just mentioned it in the introduction early on, the risk of another shutdown, the erratic policies from the White House. That's, you know, obviously not making the U.S. particularly attractive as a safe haven right now. And that's probably one of the main reasons why gold is where it is this morning.
Sonja, hold that thought, because we're going to return to you in just a moment. We want to get back, though, first to Lionel Moyse, ABC News reporter outside in New York City. Lionel, people are just beginning their morning commutes in New York. Give us a sense of how the storm is affecting the city overnight and what we should expect for the next few hours.
Yeah, this is a big deal. They're actually warning people to stay off the roads if they can this morning, because ice is going to be an issue. It is still very cold here in New York, as it is in other cities, and there's a concern that the snow will not melt as it needs to make the roads safer. There are some flurries that started coming down a little bit a while ago, so that could be the story again today. But we are not in the clear. The National Weather Service is warning we could feel the impacts to travel and infrastructure for several days.
Yeah, I mean, anyone who can stay at home, I guess, is trying to stay at home, including, you know, everybody who goes to school, right? Schools are out for the day. Does that continue into tomorrow? We know that obviously energy infrastructure is going to be impacted. Transportation has been hugely impacted across the country.
Most definitely. Transportation definitely impacted. Now, the kids were not so excited about this. School is still in session, but it is remote, so they're going to have to enjoy the snow day, maybe on a lunch break. But that is going to be a major issue. There are about 4,000 flights that have already been canceled again this morning. And again, the flurries are still coming down, and it is very, very cold. So this is something that we're going to have to keep an eye on. The trains were doing okay. There were some issues with trains. It seems, though, that the city was prepared in getting the salt trucks out and getting the plows to come. We've seen them out and about this morning, and hopefully that will make the morning commute a little bit smoother.
Hopefully so. Lionel, thank you so much for being outside for us today. That's Lionel Moyse of ABC News. Sonja Marten is with us now of DZ Bank to talk about these crazy currency moves that we've been seeing. So Sonja, you mentioned gold at $5,100 practically. I mean, it was a surprise to see it above 5,000, and suddenly it's way beyond that. But we also have the Swiss franc strengthening quite considerably today too. How concerning should that be to the SNB?
Massively concerning to the SNB. The Swiss National Bank is in a very, very difficult situation right now. The problem is that the franc has been strengthening, or has been very strong. That is leading to a massive import of deflationary tendencies into Switzerland. It is a big problem for the SNB. Interest rates are already at zero. There's basically no room to cut rates further unless they're willing to go back into negative territory. The alternative would be intervention, but that might be risky because tensions with the US over the trade deal are still running very, very high.
So when the New York Fed calls around banks to check on the exchange rate, I mean, what is this rate check signaling to the market?
Well, I think the important message here is that the authorities in the US and Japan are willing to work together. I mean, obviously, intervention from the BOJ and the MOF in Japan is nothing particularly unusual. They have a very active history of intervention in the currency market. But the problem is oftentimes that these interventions don't have a lasting impact. Underlying trends usually tend to dominate what you can achieve by intervention. It's a bit of a different story when you have the Fed and the BOJ and the MOF working together. And I think that's why we have seen such a massive move in the dollar-yen exchange rate, because the signal here is we might be potentially intervening together in this one, and that is a much stronger signal to the market.
Sonja, we had, Prime Minister Takaichi come out and basically warn the market, even though she said, look, I don't talk about these things, but I'm warning the market, we will do what it takes. Now, what is the market supposed to believe? Because on the one hand, she's saying, for her election pitch that she's going to pause the sales tax for 2 years. And on the other hand, she's saying, but we'll do whatever we want. I mean, at some point, it's not in her hands. It's in the market's hands, right?
Yes, I think that's been an ongoing problem for the yen. I mean, we've talked about this in the past. I mean, we have for a long time now had a situation where the BOJ has signaled very clearly that it's sort of achieved a monetary policy turnaround. We're looking at higher interest rates. We're looking at, quantitative tightening. And yet the yen sort of continued to weaken because the signals that were coming were so mixed. And it's the same here now. Takaichi, saying on one hand, she doesn't want the exchange rate to weaken further, but at the same time planning quite a dovish fiscal policy stance, which is obviously putting some pressure on the currency. So it doesn't really fit together. And again, intervention can only achieve so much if the underlying fundamentals are pointing in a different direction.
Can I ask you about sterling as well, Sonja? Because obviously we had Andy Burnham, not being allowed to run, let's say, for a seat, which means that he can't challenge Keir Starmer as Prime Minister, which, there are so many cross currents here because that means that maybe somebody else could and the market wouldn't necessarily know who. So what happens with sterling, given that there's also the Bank of England in play there?
Yeah, again, there are a very confused situation. We have had for a long time now, I think, a very difficult political situation in the UK. I mean, Keir Starmer won a landslide victory, and it's kind of been going downhill ever since. He hasn't, presented a good picture, neither domestically nor externally. I mean, he did show some backbone earlier this week or last week when it came to Greenland and remarks by Donald Trump, but generally speaking, he's perceived to be very weak. So that's not doing any good for the economy. The fiscal policy situation, the budget, all that's weighing on growth prospects, on the labor market. The BOE, obviously in a tight spot, weakening labor market, too high inflation. So I don't think there's any real upside for sterling from here onwards.
Sonja, is it possible to have targets in an environment like this where, a tariff risk goes away 1 week, but then a different tariff threat comes along over the weekend?
Yeah, I think that's the big problem that we all have. I mean, as I said earlier, the year is not very old, but it feels much, much older. And, we've had such turbulences already. And I think we have to just face the fact that Donald Trump is entirely unpredictable. I don't think he knows himself what he's going to do the next day. So to be honest, that's going to stay with us. That is not going to change. He's still going to be in office for another 3 years. And I think that volatility will not entirely go away. So it's just a matter of keeping an eye out on things and just being ready to adjust at any time.
Yeah, absolutely. Sonja, thank you so much. Sonja Marten of DZ Bank. Now to other top stories trending on the terminal this morning. Amsterdam-linked CVC has agreed to buy US credit manager Marathon Asset Management. The deal is a cash and equity transaction with a base consideration valued at as much as $1.2 billion. The acquisition is part of CVC's efforts to grow its footprint in US credit markets. Franklin Templeton is folding its European private credit unit, Alcentra, into its US counterpart, Benefit Street Partners. The combined businesses, operating under the Benefit Street Partners title, will oversee roughly $86 billion in assets. The move reflects broader consolidation across the private credit industry. Columbia University named University of Wisconsin-Madison Chancellor Jennifer Mnookin as its next president. She will be Columbia's fourth leader since late 2023. Columbia launched its presidential search in the spring after a period of leadership turmoil that began when pro-Palestinian protests swept the school. Mnookin will take the helm July 1st. Coming up, the shutdown risk looming as Democrats threaten to block funds to Homeland Security as tensions flare further in Minneapolis. This is Bloomberg.
We cannot fund a Department of Homeland Security that is murdering American citizens, that is traumatizing little boys and girls all across the country in violation of the law. Democrats are not going to vote to fund this version of the Department of Homeland Security.
The risk of a partial government shutdown rising now as Senate Republicans plan to reject Democratic demands to split off funding for the Department of Homeland Security. That's after a second killing of a U.S. citizen in Minneapolis. House Majority Leader Steve Scalise spoke to CBS on Sunday saying, quote, Minneapolis has its own problems, failed leadership that has led to all of this. Failed leaders need to look in the mirror and tone it down. Now more than 60 CEOs of Minnesota-based companies are calling for an immediate de-escalation of tensions between state, local and federal authorities. Joining us now from Washington is Bloomberg's Kasia Klimaszinska. Kasia, is there any hope of de-escalation? Who would make the first move? Because right now, at least in Congress, it's only escalation that I'm seeing.
Hello, indeed, very difficult situation. And here in DC, the bottom line is that the risk of a partial federal government shutdown is increasing significantly because Democrats said they will not fund the Department of Homeland Security. That's the department that sent federal agents to Minnesota. Both Democrats and actually some Republicans demand a thorough investigation of what happened over the weekend. But Democrats also say they will not let any more money flow to the Department of Homeland Security. And they do have significant leverage because by the end of this week, Senate has to pass a funding bill. Otherwise, not only DHS, but also Pentagon, the Labor Department, the Health Department will not have money to operate. And so we have this risk that Congress will not find a solution because Republicans at the same time insist on passing the bill that the House has already passed last week. So House, interestingly, voted on the funding measure last Thursday and then left the town. So they aren't even here if the Senate was to make any changes to the legislation.
Yeah, it's so complicated. Now, meantime, President Trump has a new tariff threat out there. He's threatening Canada again if it does a China deal. Can you give us, more details on that? Because it seems like Canada has already moved on to India at this point.
President Trump issued a new threat of 100% tariffs on all goods from Canada because he believes that if Canada goes ahead with a thorough trade agreement with China, then China will just dump its stuff in Canada and it will find its way into the U.S. So also Treasury Secretary Scott Bessent reiterated this threat on Sunday, saying that Canada is changing its posture here. It used to be with the U.S. and with the European Union trying to block the flow of cheap Chinese goods, but now they're letting them in. This all happened, of course, after Canada Prime Minister Mark Carney gave a speech in Davos in which he warned against the coercion by superpowers. It's clear that President Trump didn't like the speech, and after those remarks, he changed his tones and issued those threats.
And of course, Mark Carney is dealing with Ottawa and, Quebec and so on as well. He has domestic issues to think about here too. But I'm curious, will Canada continue to make these bilateral deals? I mean, it looks like at the moment they're in the middle of making a deal with India too.
Indeed. So it's clear that in the light of the uncertainty coming out of the U.S. and this constant change of tone and new threats, Canada is looking elsewhere. So it's building ties not only with China, but also with India. And to be fair, the deal with India and the deal with China is relatively narrow. It's not a comprehensive free trade agreement. It's just an understanding that the two countries reached to kind of renew the flow of some goods. So Canada indeed would let a relatively small amount of Chinese cars in, and in return, China would buy some of the Canadian agricultural goods.
Kasia, a new week in Washington, always interesting. Bloomberg's Kasia Klimashinska. Coming up, a big week in markets, a Fed decision and tech earnings still on deck. Your week ahead next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead this week. And boy, is there a lot. We have that Fed rate decision coming on Wednesday, obviously. We also get earnings from Meta, Microsoft and Tesla, three of the big ones, and that's also on Wednesday. And then we get Apple results on Thursday. All right, let's take a look at some movers pre-market. We have Revolution Medicines moving quite substantially. Wall Street Journal reporting that Merck is no longer interested in talks to acquire the biotech firm, down more than 22%. USA Rare Earths, well, this is up more than 40% earlier. The Financial Times is reporting the Trump administration is planning to invest $1.6 billion into the mining company. Now, we'd heard about this before for USA Rare Earths, critical metals and so on, but, you know, we have to wait until it's obviously, you know, made official, and then you have to wonder if that's going to be a sell the news event. And then, of course, you have mining companies just rallying today across the board. Newmont Mining up 4.5%, but plenty of others also rallying. Gold has surpassed $5,000, almost at $5,100 an ounce. Silver also rallying, as are other metals. Let's take a look at the macro environment now, because we have futures pointed lower. We're off our lows of the session, but some risks emerging over the weekend. Once again, the tariff on Canada risk, the partial shutdown risk, the winter storm aftermath risk, plenty of them out there. That has gold. Look, we're only $8 away from $5,100 an ounce. The 10-year yield, though, at 4.20, so all pretty calm on the Treasury front. Let's take a look at currencies, because you really want to be watching the yen today and also the Swiss franc. We had a 5 yen move, 5 big figure move since Friday. We were above 159, we're now below 154. The market is definitely anticipating intervention, or at least believing that intervention could come if things get worse for the yen. The haven trade is alive and well in the Swiss franc, and that's got to be causing the SNB some concern. And with all of that, the US dollar down 0.4% versus a basket of currencies. That debasement trade potentially back on, but it's also, of course, the mirror image of all of these strengthening trades, these haven trades. Sterling also a little stronger today as well, after the Andy Burnham threat to Keir Starmer has maybe gone away for the moment, but of course that opens up the potential for other threats. But this is definitely a space that we want to be watching in today's trading. We also have natural gas as well. Just a few hours ago, the front month contract opened up another 17%. A huge threat here, at least to prompt delivery, right? So the second month contract and the third month contract, they're not rising as much, but it's at the highest now since 2022. All right, that is it for Bloomberg Brief. Surveillance is next.